Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Welcome in, Joe Cucchiara with Real Estate Radio Live. I hope everyone is doing well, and thank you again for tuning into our show. Again, I am trying to do these once a week and get back on schedule. I apologize for the inconsistency of the podcast over the last several months. Had a lot of stuff going on, and going to be back to these, committed to it once a week. Have a lot of information to share, and we'll continue to do that as well. And I want to again take the opportunity to thank those that continue to follow the show. We get tens of thousands of downloads each month. Do appreciate that very much. And we always appreciate the people that have been with us for many, many years. You know, we started this journey in 2011 with the live radio show, and then started podcasting, I believe it was in 2014, and continued to do that. And the show is still continuing to grow and grow strong, but we're going to add more content. Now we should start having some additional guests on too, which I'm very, very excited about going forward in regards to real estate. And most of you know, we're also big believers in giving back to the community. So I'll continue to have those people on as special guests as I do for Giving Back segments, as I did. That was really excited and very, very touching to have my daughter on a few weeks ago. If any of you have not seen that, or I should say listen to the podcast, please go back and listen to it. I interviewed my daughter. It's very brave on her behalf to discuss depression and mental illness and her personal challenges, and also some great hope and inspiration that she provided for others. It was a very, very emotional, inspiring podcast. So if you hadn't had a chance to listen to that, go back and listen to that podcast when I interviewed my daughter just a few weeks ago on that. All right, as we get started here, the topic today is Bay Area real estate. Are you buying, selling, or holding? Buy, sell, or hold. So I have some information on this and some updates. I also am going to share with you, stick with us and don't tune out of the show, because towards the end of the show, I'm going to share with you a little secret on financing non-owner properties. That's right, financing investment properties. I have a little secret for you. A lot of people in the industry don't know. The reason why it's a secret, and I'm going to give you some great insight on how to circumvent the system, is that Fannie and Freddie just recently did a ridiculous increase on any kind of financing on non-owner properties. It was ridiculous. It's a greed play. It frustrates me. I'll talk a little bit more later, but I have a little way to circumvent their pricing, and I'm going to share that with you a little later in the show. All right, this show, speaking of it, is brought to you by Bundle Select, bundleselect.com for more information. Bundle Select partners with corporations, and we provide employees a platform to navigate, buy, sell their real estate, finance, relocation, everything. It's a great program. We're growing by millions. We just signed up another benefits company that added 30 million employees to the platform. Bundleselect.com. Again, we're growing quickly, and this is an employee benefit. We partner with corporations all over the United States to offer their employees a platform so that they can navigate the real estate easily. It's an employee benefit, no different than medical, dental, 401k. We're super excited about it. For more information, go to bundleselect.com. If anyone's listening and you're an employee of any company, doesn't matter what size, and if you want to pass that information on to your HR benefits people, please do have them go to bundleselect.com. We could do a demo and get them started. All right, so the topic today, Bay Area real estate. Do you buy, sell, or hold? So I'm going to discuss this a little bit. As most of you know, I've been following the show for all these years. I study real estate on a regular basis every single day, day in and day out. I certainly have my own opinions and my own beliefs. If you go back, I think I've done pretty well in helping and sharing with the audience some of the insights and some of the investment ideas and some of the ideas and strategies I've had over the years. One of the most recent ones was years ago. I started talking about how it would be a great idea to invest in downtown San Jose. This was before the Google Village. This is before all the growth. This was before when I saw the peninsula really running out of space in the Silicon Valley, running out of space for high tech. The next obvious place for me was downtown San Jose. And again, this was 5 or 6 years ago, I was talking about this. And the reason why is that we were running out of space. And so the next logical place to me was downtown San Jose. A lot of people were saying, no, there's never going to be growth there. They keep stalling. And I just didn't believe it. I just knew that there was going to continue to be growth. And so for those that took that advice and invested in downtown San Jose, whether it was commercial or residential, 5, 6, 7 years ago, I'm sure you're doing awfully well if you continue to hold that real estate, and will continue to do that. So do you buy, sell, or hold? Well, it's real simple. You do all three, but it depends on your strategy. So if you know me, I'm a big fan of planning, strategy, and really taking a long-term view of what you're going to be doing with real estate. So if you're buying, be very careful. And let me just preface this by saying, if you know me, if you're buying for a primary residence and you plan to be in that property for 7 to 10 years, then buy anytime. Don't wait. Buy anytime, because over the long run, you're always going to do okay. I believe you're always going to do okay, unless you have to sell real estate on a short term when it comes to the Bay Area and the Silicon Valley here. So should you buy? The answer is yes, yes, but there's the big question mark, right? The big question mark. Only buy if you could afford it and you're not going to regret it, and you're going to hold for 7 to 10 years. So someone might say, well, what do you mean, Joe, if I regret it? There's been some studies out recently and some data that would suggest, and it's actually pretty compelling, that 40%, this is interesting, 40% of the people that bought in the last 18 months regret that they bought. And so you got to dig deeper and find out, why is that? Well, the majority of people, this 40%, think about that, 4 out of 10 people have regrets of buying over the last 18 months. And here's the reason why, when you dig into the study and look into it. It's because they felt pressured. Once they got into the place, buyer's remorse set in. They realized it really wasn't the right place. It wasn't the right neighborhood. They overpaid, all these things. Now, the reason why this is important, and I really hope you listen, is don't be those people that just buy to buy because you feel like you're going to lose out. If you're buying to buy because you feel like you're going to lose out, it's a bad reason to buy. It'll backfire on you. I guarantee you. Now, if you're buying because you really like a neighborhood or a place, and maybe you see the vision of it, maybe it's not as big as you want, but maybe you could expand, that's a different story. Then you have room to grow. There's a strategy in place. You've planned, you've thought about it. You like a certain school district, whatever. So when it comes to buying, please only buy if it's something that really makes sense for you. Only buy if you plan on keeping for 7 to 10 years. I know things could change, so I understand that, but your plan is to keep 7 to 10 years. And only buy if you like the place, or you really enjoy the place, or you see the vision, or you see the prospects, or you see the potential of the place. Don't buy. Don't, please, you're going to regret it. Again, 40%. Don't buy because you get caught up in the hype. I saw this. I've been through these cycles before. We saw it in 08 and 09. We saw it in 04 and 05. People were buying to buy because they thought they were going to lose out on the market. There was people jumping into the market thinking, oh my God, I better go buy now, because if I don't, the market, that house that's $1 million is going to be worth 10 million. No. Now, a lot of people talk about timing. And just like the stock market, I think it's a bunch of nonsense. When you hear these people say, I've timed the market perfectly, run as far as you can, because that's nonsense. There are very few people that time anything. And the ones that do, every once in a while, they get it. They're lucky. We're lucky when we time stuff. We're fortunate. No one knows the timing. Now, there's people that study this on a regular basis and can give you legitimate advice and feedback and information and data to help you support those decisions. But No one is an expert and has the perfect timing of the stock market or the real estate market or any other markets for that matter. So the reason I say that is that please don't get caught up. Only buy if you're ready, if you've done the plan, you plan to keep long term, and you don't feel pressured to buy. Then you should buy and don't regret it. And the last thing I'm buying, don't buy if you feel like you're buying to win a race, or you're buying because you want to catch up, or your friend or your neighbor or your coworker's buying and they're saying, oh my God, you better buy. Buy if it makes sense. Take a long-term approach on these things and you'll always do well. All right, so that's about buying. How about selling? Is it the right time to sell? This is a big, giant green light go button. If you are going to be moving out of the area and you're strategic about what you're going to do, or you're going to rent for a while, then I'm a big fan of selling right now. I'm telling you right now, if you are going to move out of the area and you're going to get more for your money, and or you say, you know what, I'm going to rent for a year or so, ride this thing out and figure out where I want to be. I am a big fan to sell right now. And the reason why is because you've had such a run up in the equity in your property. It's amazing. I mean, you could cash out. I'm seeing people do it right now. I know a handful of people this last couple of months that have sold and they're just going to rent for a while. Great idea. If you could do it and you want to do it, I think it's a great strategy. If you're not stressed about buying, I mean, I know people that have got record profits they took off the table from selling their property, and they're going to rent for a year and a half. But they're going to rent and keep their eyes open, because if this market corrects or if this market flattens and they see an opportunity in an area where they want to then go in and buy a home, then they could do it. I think it's a great strategy if you don't mind it. So the question is, should you be selling? Well, it depends. Yes, if you're going to be moving out of the area and you're going to get more for your money. And secondly, if you could sell and rent for a while and you're comfortable with that, it's a great time to sell right now. It's a fabulous time to sell right now. I mean, in some cases, I thought about it. I think about it, but I'm not ready. I'm just not ready. And so it's not right for me, but it's right for a lot of people. So that's the second one. We covered buy. We're finishing up on sell. Those are the two reasons I would sell. Now, don't sell if you're taking a long-term approach, or don't sell if you're not sure about a job. Maybe you might be losing your job or transitioning or something like that. Then don't sell. And don't sell. Be careful about selling if you have to get right back into this marketplace. That's another tough one. However, I will say, keep this in mind. For those people that are concerned like, Joe, I don't want to sell because I'm going to get right back in this marketplace, there's some truth to that. But let me also, I always say, take the emotion out of these decisions and look at them logically. So try to look at the appreciation and the profit you earned from the sale of your home, and not go get so caught up on maybe paying a premium for the new home. Again, let me give you an example. Let's say you bought a home, 7, 8, 10 years ago for $1 million, and now it's worth 1.7 million. You're excited that it's worth 1.7 million. You have all that equity to move. Okay. And now you're looking to purchase a home at 2 million. And you're thinking, gosh, I'm paying a premium from that home. They might be overbid. I might be paying a little bit more than 2 million. Well, that's true. But keep in mind, you just made $700,000 in profit off the home that you just sold. Keep that in mind. You're moving that profit and that equity into another appreciating asset. Keep that in mind. This is not like a stock, okay? This is not like taking $700,000 and going and buying IBM stock or Microsoft or Apple. You're buying another appreciating asset. This is a part that a lot of people forget about. And this is why leveraging and the cost of money is so important. When you get today's interest rates in the 3% and even sometimes in the high 2s, 30-year money, and now you apply that loan to an appreciating asset of, say, $2 million that is appreciating even at 3 or 4% a year, that's remarkable. Remember, that cheap cost of money is helping you drive that vehicle, of which is a appreciating asset, of why a lot of people get extremely wealthy in buying and holding real estate. So the question is, do you sell? Yes and no. And I just covered those. And make sure you kind of go through the checkpoint. Always check with financial planners, CPAs. I say this all the time. People, myself, check in. I do this for a living. And then I know there's a lot of you that always call, email, text, and I have dialogue. Sometimes I spend hours on the phone with people, giving them some different suggestions and options and opinions of what I think about the market and what they might be doing. All right, so the third one is, do you hold? I mean, this one is an easy one for me. It really is. Unless there is some kind of circumstances, financially, medically, family-wise, unless there's some real compelling reason to sell, I say never sell real estate. Never. I sold a couple myself. I never wish I would have. I hold several now. I say never sell real estate if you can. There's too much history, there's too much data, there's too much of a lot of stuff that just supports this. And don't listen to what I'm saying. Go do your research. If you hold real estate long-term, whether it's commercial or residential, you will most always do well long-term. If you have to sell it, if you take a short-term approach, if you sell in a downturn, of course, then you're going to lose. But if you take a long-term approach on real estate, you will almost always do well. There is never any guarantees, but the data, statistics, and history will tell us that you have a great chance of doing well if you buy and hold. So if you like the idea of real estate and you like the idea of diversity, which I do, I talk about it a lot. I mean, I invest in the stock market, I invest in other things, but I also invest in real estate, and I would never stop investing in real estate. In the long term, I think it's a great way to go. So there is your the big three questions. Do you buy, sell, or hold? I hope that helps. As always, if you want information, if you want to run some statistics, if you want to, bounce some ideas off me, I'm always here to help. That's what I do. Real estate's a great vehicle to invest in. The Bay Area is a very unique place. The other thing I'm going to cover for a couple minutes here before I give you my secrets and my surprises about investment property. Hang on there, because I'm going to give them to you. A lot of people don't know about this, and I am going to share some information with you if you're buying a second home or an investment property, of how you circumvent the extremely high fees and cost and rates that Fannie and Freddie just implemented on those in the last couple of months. So before I do that, real quick about the market. A lot of people think, just like the stock market, just like the real estate market, is it going to correct? When's it going to correct? So here's the best advice I could give you. Nothing ever continues to go up forever. We know that. We've seen this. We get euphoric. We think it's always going to be wonderful. We've had quite a run. There's a couple of big reasons why real estate has thrived in the last several years. One, interest rates are extremely low. Two, and one of the biggest ones, is there's a lot of wealth that have been created in the United States, and specifically in the Bay Area in the last 5 or 6 years. People have taken that wealth and reinvested it in the real estate. A lot of people are taking money off the table and diversifying, taking money out of the stock market and reinvesting in that in real estate, because they want to hedge their bets and they don't want to have all their eggs in one basket. Here is my prediction on the market and the markets to watch out for. And I'll update you this in a couple of months and see how things turn out. So I do think here towards the end of the year, we will see a flattening and a level of the real estate market. I really do. I do not see a setback until maybe next year a bit. It depends. Now, inflation is really, I think it was at 5% today, the consumer price index. I think it was, so the chance of inflation is getting more and more likely. And if you go back to my podcast, I talked about this a couple of months ago, and I believe that my recommendation or my advice at the time, or my opinions, were that we were going to see inflation by about August or September this year. I still think that's probably correct. And what does that mean? Well, as inflation gets if there's more of a chance of inflation, we see the cost of goods continue to go up, like gas and food and other things like that. It could have an effect on the stock market. It's likely not going to have a huge effect on the housing market initially, but if it's a long-term inflationary concerns, it could, because then that forces people to potentially sometimes sell and make adjustments with their real estate. So we're going to have to hang on and see about that. So my prediction for the real estate market is I still think we're going to see a pretty strong year this year, especially in the next couple of quarters. I do think we're going to see some flattening by the end of the year. The thought is, and the conventional wisdom is, that interest rates will stay low all the way through 2020, even 2022 potentially. And so that being said, that there's likely that will help the real estate market as well. Here's one area of the market I really strongly believe, I've talked about this before, I'll continue to talk about it. Here's one area that I think you want to watch out for if you are someone holding real estate, and then you want to keep an eye out if you're a person that's investing in real estate or potentially looking for a dip. Okay, I have a strong opinion about this. I think that this pandemic, the stock market, this run-up, this exuberance, had an unbelievable effect on vacation rental markets. Again, I'll just use examples: Lake Tahoe, the beach, Pebble Beach, Santa Cruz, Montana, all these places that are secondary markets where people bought second homes. Now, this is what I think is going to happen. Keep an eye on this. People were so excited that I never have to go to the office again. I don't really need to go in the office. So I'm going to go. Why would I live in San Jose, or why would I spend time in San Jose or San Francisco when I could buy a home in Tahoe and I could put my feet up? I could go skiing when I want and golfing when I want, and I could live in Tahoe and work in Tahoe because I never have to go in the office again. I think we all went through a bit of a fantasy run here. The reality is this: we will go back to the office place. We will go back to the office place. Will we do it full time? Will we do it in droves? Will we do it like it was before? No. But we will go back. We will go back. You're already signaling it. You guys remember 6-7 months ago, Google came out, one of the biggest companies in the world, right? Influential companies in the world. They said, we'll never ask our employees to come back to work. Just recently, guess what? They reversed their decision. We want our employees to come back to the office. I'm telling you, the euphoric kind of la-di-da fantasy is going to come to an end pretty soon. And I don't mean to be harsh or negative about this. I think it's great that people could go work wherever they want. I do too sometimes. I love it. That's great. Here's the problem. There's been a huge run up in the vacation markets with people euphorically buying property, second homes, all these places, visions of grandeur, staying in these wonderful places and spending 6 months a year at these. When the reality hits, ladies and gentlemen, and you're not spending 6 months a year in Montana, or 6 months by the beach, or 6 months in the mountains, guess what happens? Guess what the first thing that happens? You sell that real estate because it's too costly to carry. That happens. So here's my prediction. Secondary markets, vacation markets, are going to be the first one that is going to feel the pain. When is this going to happen? My guess, it's going to start in 2022, 2023. Reality is going to come back. People are going to be back to work. Demands are going to be there. They're going to be holding real estate they're not spending time in. Some people might flip them to rentals. I get it. But some people couldn't afford that, and some people won't do that either. So this is my prediction. Keep an eye, if you're a real estate investor and you're looking for places to invest, keep an eye on these secondary vacation markets over the next 2 years. I think we'll start to see some flattening, and we'll even see some big corrections in those places where you can come in and actually potentially get some decent deals over the next several years in those types of marketplaces. All right. So here is the big secret you've been waiting for. Please pass it along. Call me with more information if you need it. So recently, Fannie and Freddie implemented, which I think is super, super greedy, a process where they applied an additional 1.5% to 2% of cost if you buy an investment property. And some people would say, well, they did it because of risk. Bullshit. Excuse my language. No, they didn't. They did it for greed. Fannie and Freddie increased those fees because they knew people were buying properties like at historic clips, and they wanted to increase their profitability. Now, I don't, fault anybody for increasing profitability. We all want to be more profitable, but it's nonsense when they say they did it for risk. No, they didn't. They did it for greed, just like they applied a 50 basis points to every single refinance that Fannie gets. Every time we refinance a customer in the United States, Fannie Freddie gets 50 basis points just because they just added additional fee on there. You, the consumer, paid for that. It's a joke. It's greed. Okay. So anytime you now go to buy a second home or a rental property, Fannie and Freddie implemented these huge cost structure in addition, added on, piled on. To give you an example, a year ago, if you would have bought an investment property, let's say you put 25% down and maybe you financed $400,000 or $500,000, the interest rate would be still pretty good, and you could even do it at no points or 1 point, and it wouldn't be that far off, maybe 50 basis points off of primary residence. Let's say a primary residence is 3%. You might be able to get an investment property for 3.5%, maybe pay a point. They've increased the cost so much on investment properties right now that it's 2 to 3% higher than primary residence. I'll give you an example. You could get a 30-year fixed still for around 3% at 0 points and maybe less. Okay, let me just compare these for you. So primary residence, good credit, good loan to value, all that. You could still get a 30-year fixed for 3% or less at no points. Okay. To compare that, if you bought the same property as an investment property, you're going to have to pay 4.5%, 4.25% to 4.5%, maybe pay 1 to 2 points. That's right, 1 to 2 points. This is how expensive Fannie and Freddie made it for you to buy rental properties. Okay, I'm going to let the cat out of the bag. Here's how you get around it, and call me for more details if you're buying investment property. The smart people in the mortgage business have been doing this for 21 years. And my team here, we've helped thousands of people a year. We had banner years the last couple of years by most. If you need any help with mortgage on purchase, refinancing, give me a call. We're here for you. We do that as a team here. We're going to let the cat out of the bag. For the mortgage people that understand the markets and have the investors and the wherewithal, instead of going Fannie and Freddie when you buy or refinance a rental property or a second home, ask your mortgage advisor or your professional or your loan officer, if they know, to make the transaction and look at a jumbo investor instead of Fannie and Freddie. That's right, jumbo investor. Jumbo investors do not have the extreme expensive hits that Fannie and Freddie do. And believe it or not, you could get a lot better rate in terms on a jumbo with a jumbo investor doing a second home or a rental property than you can with Fannie and Freddie right now. A lot of people don't know that. We're doing a lot right now. If you have any questions about it, if you're thinking about buying a second home or a rental property, give me a call. We can walk you through that. Again, you don't have to use Fannie and Freddie. A lot of people don't understand that. You could use a jumbo investor with that purchase or the refinance of a second home and a investment property and get a lot better rate and a lot better terms by using a jumbo investor instead of Fannie and Freddie. And that is your tip of the day. All right, this is Joe Cucchiara with Real Estate Radio Live. Thank you again for tuning in. Thank you again for listening. Thank you again for all those people that email, text, and contact me and with suggestions for shows as well. I want to thank you for tuning in. For more information, you could always go to RERL-live.com, RERL-live.com. Take care, and we'll be back with you next week.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERL-live.com. That's RERL-live.com. Subscribe to our podcast. Discover more at RERL-live.com.